Hi, my name is Alexandre Kesh. I am the CEO and co-founder of Onchain Custodian, a digital asset custody and open finance service provider based in Singapore. Onchain Custodian is continuously working on solving the digital asset trilemma of security, convenience, and compliance. In June, we are discussing this trilemma with industry leaders on the 4th, 11th, and 18th of June. Today's session is about convenience. Our moderator is Rohan Juneja, Head of Business Operations at Onchain Custodian. He will discuss with our panel about convenience and how customer experience in the digital asset industry has evolved since the launch of Bitcoin 11 years ago. We are proud of being able to line up such industry leaders today for you. Camilla Churchill, Global Head of Business Development at Celsius Network. Yuval Rooz, CEO and co-founder of Digital Asset. Kevin Patoul, CEO and co-founder of Keyrock. And Aymeric Salley, Head of StraitsX at Xfers. You can go through their bio as we are getting ready for this amazing panel. Feel free to ask your questions using the chat on YouTube. Our panelists will respond to them as we moderate them live on the chat. Enjoy the session.
Okay, thank you, Alex. Thank you very much. So first of all, thank you everyone for taking the time today out of your schedule to join this panel. Our topic of discussion today is solving the digital asset trilemma of security, convenience, and compliance. And it's actually a three-part panel series, and Alex and our COO, are moderating the other two panels. Today, we'll focus on the convenience part of the trilemma. And before we jump into the questions, I thought it'd be a good idea to just go around the room, get a quick round of introductions from everyone, and feel free to throw in a couple of lines about your organization or something you're working on right now. So I think we can start with who I have on my left, Aymeric.
Sure. Thanks, Rohan. So I'm Aymeric. I'm with Xfers. Xfers is a regulated payment company in Singapore and Indonesia. And at Xfers, I'm leading StraitsX, which is the stablecoin initiative for Southeast Asia. So this year, we are already live with our Singapore dollar stablecoin, XSGT, that we are currently ramping up. And later this year, we'll go live with our second stablecoin, XIDR, which is the Indonesian rupiah stablecoin. And we are running these stablecoins on open blockchain protocol, namely Ethereum and Zilliqa.
I'm just going on my screen. I have Camilla next.
Yes. Hey. Hi. Thanks, Rohan and Alexandra, for organizing this. So my name's Camilla Churchill. I run business development at the Celsius Network. I've been at the company a few months now. I joined just before quarantine started here in the US, where I'm based. Celsius is, I think was the first lending platform in the crypto arena. And our mission is to provide consumers with, new financial products in the crypto arena and an opportunity to earn interest in their assets. And we pledge to give back, 80% of the income that we earn back to our customers, and really work in their best interest. So we're working on adding more products to the platform, more coins, stable coins. We recently added gold, which we think is quite revolutionary. And want to really disrupt financial services for in this space.
Sorry, thank you, Camilla. Kevin, I have you next.
Great, thank you, Rohan. Thank you, Alex. So yeah, I'm Kevin. I'm one of the co-founders and the CEO of Keyrock. Keyrock, what we do is that we're building scalable liquidity solutions for all financial markets at some point for digital assets. For now, we're active on over 100 markets, and basically what we're planning to do and working on now is to keep on expanding and be able to provide liquidity to all markets where digital assets are traded.
Fantastic, thank you. Yuval?
Hi, thank you for having me. I'm Yuval Rooz. I'm the co-founder and CEO of Digital Asset. We've been in business since 2014, and we're actually focused on convenience. The way we're doing it is we developed a smart contract language that is platform agnostic, meaning you can build distributed applications that can run on any type of chain, public, private, open, closed, and really just think about how an application should behave. And after that, choose what technology you want to run it on. So that's what we're focused on. Thank you.
Fantastic. Very quickly about Onchain Custodian. We, I believe, have now established ourselves as a secure, insured, and hopefully soon to be licensed custodian here in Singapore. But we're slowly moving outside of just providing secure wallets into being a platform that also provides other value-add services like lending, staking, crypto on-off ramp, and hopefully near in the future, active trading. And we're working with many partners like yourselves in providing those services to our clientele. And our real sort of mission out there is also to make digital assets a convenient and a safe place to enter and ideally derive yield from. So that's a very quick introduction about us. The first question I wanted to get into was a little broader, and then we can maybe narrow it down from there. But all of you work in sort of different parts of the blockchain and crypto ecosystem. It'd be really good to start off with hearing about what does convenience mean to you and your organization, and how do you sort of look at bringing that to your clients. And feel free to anyone, whoever's ready to go first. I know there might be a little bit of talking over each other, but that's okay.
I'm happy to start. So I think that again, as I mentioned in the intro, what we're focused on is convenience, and it actually came from client demand. So as we started building distributed applications for our customers, for example, we're putting the entire Australian equity market on a blockchain. Yeah. We started realizing that building these complicated applications, generally speaking, is hard. Now, when you start thinking about building them in a distributed manner, doesn't make it easier and make it extremely more complicated. Yeah. And my background before Digital Asset, I worked for a company called DRW Trading out of Chicago, which owns Cumberland Mining, which is a very big OTC provider. And when you start thinking about an OTC desk, you start thinking, okay, you can think about limits, white labeling some addresses, and yeah, there's some kind of workflows internally. As you start thinking about digital assets or distributed applications in an enterprise setting, which is really what we as a community are striving for, really enterprise adoption, starting to have big asset manager. The workflows or the way how people start thinking about how to authorize transactions, or the complexity of who is even allowed to transact, it's not just a simple, multi-sig logic or some kind of a simple just limit restriction on a transaction. And it starts to become very complicated very fast. So one of the things that we think about when we think about convenience is actually, how do you abstract a lot of this complexity? How do you actually prevent from a developer thinking about all of this complexity, multi-sig, cryptography, distribution, locking transactions, all of that we really want to pull away from the developer and really just express what is the business logic that you're trying to achieve. And then what we do as a company is we work behind the scenes of connecting the dots and making sure that that business logic is enforced. So I gave an example of running or building digital assets on different chains, but it doesn't also only is restricted to how do you model digital assets. It's also how do you model workflows or complicated workflows. So we actually have been doing work in the custody space of how do you model a very complex authorization mechanism within an enterprise that ends up with a signed transaction in the crypto space. So to me, that is convenience. I think that convenience also ties the trilemma, like how you're proposing this discussion is extremely important, is convenience usually goes in odds with security, right? So for us, that's actually extremely important, is how do you give that convenience without jeopardizing privacy and security?
Okay.
Maybe I can follow
Sure.
on this. So from Keyrock's perspective, when we look at convenience in the market, we have a bit of a specific standpoint, because we are both kind of a part of the market infrastructure, but at the same time using the existing market infrastructure very much. So when I look at the convenience that we provide our clients, so we provide market making services, optimal execution, different types of liquidity services. There, what we want to combine is, one, a sense of scalability, so that we can really accompany our clients, as they grow, as they get listed on more and more exchange, and they start, getting more pairs quoted against their token or their assets. So we have that notion of scalability, but at the same time, we want to make sure that once they start working with us, they don't have to think about liquidity anymore. So it's something that, kind of a turnkey liquidity service, but combined with the ability to scale it at a big scale. So that's kind of the convenience that we're trying to provide all clients, and that we try to provide in our role of building part of the infrastructure. What is also interesting to look at for us is that we use the infrastructure a lot. As market makers, we're constantly trading on a large number of venues. I think right now we're trading around across 60 exchanges in digital assets. So as you can imagine, a big part of those operations is to move inventories around, is to be able to easily always constantly manage your inventory, constantly rebalance your inventory position to make sure that, one, you can make the most of the liquidity pools that are available, but also make sure that you can provide the service that we sell our client at the best of our ability. And there, in those operations, there's a lot about convenience, and we see that we are getting a long way. But for us, is how easily can we actually move our assets, and what are the risks that we are taking by doing so? Where am I taking a counterparty risk when I'm trading on exchanges that also provide the custody, for example? How many of those counterparty risks do we take? Where do I take a credit risk? Where do I take an operational risk when I don't have the nuts and bolts needed to easily do transactions? So of course, for us, in the way to what we're looking at convenience, kind of egoistically, the one that we use and not the one that we provide our client. The question is, how can I reduce all those risks in moving inventories around and managing our liquidity across a very large number of different venues? So, and this really for us applies both on all steps of the trading value chain, both pre-trade and post-trade. It's really a question that we ask ourselves at every single step.
Right.
Okay. Maybe I can jump here as well. I think at Celsius, again, for us, convenience, we have also quite a different, obviously a different vantage point in the marketplace. We're a financial services provider, so really convenience for us is about our consumers, right? Making it very simple for existing players in the marketplace to get access to good financial services and earn yield on their assets, and hopefully have it convenient and simple enough that we can also help drive broader adoption and make it simple for people to come into the space and access our platform in a way that's not intimidating for people that aren't already users of crypto products. So I think, as a financial services platform, that's how we think about convenience, and the way consumers work with us typically is through our app. So again, it's all about making sure the app user-friendly, very simple. Again, to your point, Yuval, the security element, we want that all behind the scenes, but, obviously have, very high quality security, but to make the use of our platform and access to the services as simple and convenient as possible. So, everything we do, everything we put out, all the content we distribute is to really break down what we do and make it simple and convenient for people to consume. So that's what I would say in summary. And clearly we work with institutional clients as well. We have corporate accounts, but we try and keep the same philosophy and keep things simple and convenient.
Anything from you, Aymeric, on this?
Yeah, I think there were a lot of good points, so I don't want to repeat what has been said. But what I particularly like is what you guys are proposing this webinar as a solving a trilemma, right? And you know, in the past, I've thought about this problem a little bit like, you know, Yuval and Kevin has outlined it as a dilemma between security and convenience, right? Because that's what the industry as a whole was trying to solve. Like, how do you offer convenience while still, you know, securing those assets and operating infrastructure that's secure? But I think what we see in 2020, at least in this part of the world, is a lot more compliance coming as part of the different steps that are required to process transactions. And I think convenience moving forward will mean not only security and convenience, but also how do we actually comply with those regulatory steps that are now part of our process and that may not be the same in different jurisdictions.
Mm-hmm. Yeah, no, very good point, Aymeric, and you're absolutely right. There is, you know, the whole trilemma, and it really, you can't talk about one without talking about the other, or you know, improve on one without having to improve on compromising on the other. You know, on the line of that, I was thinking, you know, all of you spoke about different parts of the ecosystem that you're targeting, and even different customer types. In terms of the overall infrastructure being ready in the space, and providing that convenience for new investors to come in, new developers to come in, like in Yuval's case, and start, you know, building products here without having necessary worry about the finer details, or even new entrepreneurs to just enter the space and build a business. Do you think it is, or have we been able to create an infrastructure that is convenient enough, or is it a bit, you know, still scattered, and people are sort of solving problems at their own, you know, sort of company level, versus the whole space is just growing, sort of sprouting out like a ginger from different parts?
I think we've gone a tremendous way. You know, since the last few years we've been active in the space. I think there's clearly been some very impressive progress being made, both on the B2C and the B2B side. I mean, if you look at the B2C space, which is not specifically where we are the most active, but I mean, it's easier than ever to access and to trade cryptocurrencies, digital assets. I mean, what is interesting though to see is that basically the convenience factor is the highest the further away you go from disruption compared to traditional markets. So the closer you are to how it's currently being done on traditional markets, the more convenient it actually still is. So we see that clearly. If you just, you know, onboard on a centralized exchange with a credit card, super easy to onboard. Yeah. If you go towards something that is a bit more disruptive and a bit more, you know, closer to the original vision in terms of decentralization and so on, there's still, I mean, there's a lot of progress being made and it's getting a lot better, but the road ahead is a bit longer still in terms of making it convenient. And I mean, that's mainly what you've seen on the B2C. Then if you look on the B2B side, I think that also the progress have been incredible in the last few years. I mean, now, of course, I mean, we are very happy to be invited to this webinar by you guys at Onchain. So we see professional custodian, prime brokers are things that are becoming more and more common. They're not 100% widespread yet, unfortunately, but they are there, and they definitely make our lives on the B2B side a lot easier. And I mentioned prime brokers, but of course also lenders such as Celsius and so on and so on. I mean, clearly the infrastructure has become a lot, has gone a very long way to be more and more convenient for all players involved. It's retail or professionals, clearly.
Mm-hmm. Mm-hmm. And Camilla, on just because Kevin brought up the retail part of here thing here, you know, the first time I think I bought crypto was back in 2017, mid 2017. I, you know, went to a conference in Denver, heard about this, and you know, the experience that I had in 2017 is not very different than what I would probably have to go through today. And that apart from the fact that, you know, now when you Google it, you get some very trustworthy names pop up, versus back in the day, it was a slightly more, I don't want to say shady, but like it was a more P2P system that I accessed. So you know, to make it convenient or even convenient at the same time for people to feel confident about doing what they're doing when they're first, you know, entering the space, like many people do with you at Celsius. How do you think have you, you know, sort of come across that, come along that journey?
I think that's a good question, and I think some of the work that happens is not always very visible to consumers. I mean, what I was going to pick up on as well is Aymeric's point about compliance, and I think all of us sort of juggling behind the scenes what to do with different regulations and different jurisdictions and geofencing consumers and things like that. So that may not be very visible on sort of the front end, but we're working very hard to make sure that we're compliant and protecting our customers in that way. Yes, do I think the experience has changed a lot from 2017 for a consumer? I think it's just we're pushing out a lot of education. I think is part of it. To help people with that. With that process and get them comfortable and understand all the different things they should be thinking about with the platform. They're going to choose to work with a different platform and the different partners to have insurance, security, and I think above all transparency. I think a lot of companies in this space, ourselves included, in all different areas of the business have just sort of stepped up their transparency, which I think helps consumers as well. So it's sort of a tricky question to answer. But I think, there've been progress on lots of different fronts. And again, I think we all play a role in really educating the end customer.
Absolutely. And I think that is something that sort of sets Celsius apart, and people feel a certain level of confidence sending their tokens to Celsius, even though, it's it might not be something that they're used to doing, is to hand over your assets to someone. But yeah, absolutely.
Most people like getting interest.
Yes, absolutely. And there are many organizations out there offering that, right? But there's a certain level of comfort when you hear Celsius's name, and we experience that when we propose lending to our clients. Celsius's name, they're comfortable with. So yeah, absolutely.
Yeah, if I can add just on convenience and evolution, I think that I like sometimes to draw attention to a different industry, which is cloud. And if we all remember, cloud started with Dropbox, allowing people to store their photographs on the cloud, and nobody really remembers kind of like the evolution. And people were pushing features for consumers. And then, started, the enterprise space started seeing the value in cloud, and, the big guns came in, AWS, Azure, GCP, and started thinking about, okay, well, what are the features that are required for enterprise or for mass adoption of cloud at a different scale? And if you start thinking, drawing the attention to this space, I see very similar trends, right? A lot of the focus in the early days have been B2C. And you see a lot of features, how do you open an account in a more seamless way? How do you transfer some of the features on the phone? But when you start thinking about, well, how do I have enterprise adoption or enterprise players, they are worried with other things. They're not necessarily worried with iPhone or Android apps. They're more interested in how do you secure, how do you do custody, how do you do KYC better. So I think that what you're going to see is that it's really based on what segment of the market you're trying to get adoption, that you're going to start seeing these features kind of competing with one another. So I'm actually seeing that on the consumer side, there has been a lot of features. Things like, what Camilla is describing, different new products. That's where you're going to see on the consumer side a lot of the innovation. But I think more from the interface perspective, there has been a lot of progress. I think where you are going to see a lot of the work happening now is how do you get enterprise adoption? And there, I think it's more of the behind the scene features. How do you do custody better solutions on security, workflow, authorizations, reporting, taxes, all of the things that at the individual level, you're not necessarily that concerned about.
Yes, I completely agree with that. Aymeric, on the for Xfers at least, I know in Singapore here, Xfers sometime last year is when your ramp on came around to get onto Binance and some other exchanges. That sort of completely changed the game for a lot of people in being able to simply buy in with fiat to crypto here in Singapore. Do you guys personally feel that that sort of the convenience or the interface that you sort of brought onto people completely changed the way people thought about acquiring cryptocurrency, for example? here in Singapore, at least?
Sure. So actually, besides our stablecoin project, Xfers is actually providing fiat to crypto on-ramp to actually most of the exchanges that are located in Singapore. Right now, we are live with 6 crypto exchanges, integrating 2 more. And we have more customers that come to actually use our open API. And the reason is that we've been able to automate a lot of the funds flow that are required to enable, collection and disbursements of funds, providing convenience for the merchants and providing convenience for the users. So the experience now in Singapore, because we are building on top of a very good interbank protocol called FAST, which is the Singaporean protocol. The experience now in Singapore, if you're using Xfers and let's say Binance or some other exchanges that's with us, is that you can top up your account in settlement takes less than usually 5 minutes. So I've tried it recently, and within 3 minutes I had a Singapore dollar on my account, and the settlement is as fast on the way back to my bank account. So that provides a lot, of a good customer experience that I think is quite unique in Singapore. I don't think there are many protocols in the world that enable that, and definitely we've seen, from our users a very good feedback. Because that definitely, provides a lot more solutions or flexibility to Singaporean users. Yeah.
Absolutely. And actually, talking about the on-ramp and off-ramp part in Singapore, and coming back to the whole trilemma of security, compliance, and convenience, do you guys feel that, when you're trying to increase convenience, you often have to compromise on the other two, or do you think there is a winning formula wherein you can be increasing convenience at the same time increasing security and compliance? Often, something that I experience as part of my job is, for example, compliance has become sort of cornerstone to every cryptocurrency company, digital asset company, especially as all of us are applying for our licensing here. It can, in some cases, be a little inconvenient for our customers or in bringing on new customers. At the same time, there are new solutions coming out to help do that. But do you, in your experience, do you feel like it's a win-win? Is there a win-win solution, or is it always going to be a sum-zero game between these two?
I don't think it's a sum-zero game at all. I have a similar view to what Yuval actually explained before. I think we need more custodian, more access, more. I believe in division of labor first. I think everyone should be focusing on their core business. And I think if you're an exchange or if you're a liquidity provider, building an entire infrastructure off the ground from scratch is actually diverting a lot of resources that you could be using to actually build your core business. And we know in this space that to actually achieve convenience and security, this is a tremendous amount of resources that we're talking about, especially because a lot of the companies in this space are startups. So we have this security versus convenience challenge that I think custodians and brokers are currently solving. We have this compliance challenge, especially in Singapore, and like you said, it's kind of the cornerstone at the moment. But thankfully, we have also some very good companies that are focusing in compliance. And I think through partnering with these different companies and also adding a little bit of proprietary technology in the middle to have a good recipe, right? That's how we have a successful dish at the end. Right? That's kind of the approach we're taking at Xfers.
Yep, and I think for all of us, taking any risks on security just too detrimental to the business, right? I mean, it's a big hack, a breach, you lose your funds at this stage in the game. It's not good. So I think putting in the extra work on the security, while building convenience and usability. I mean, I think for all of us, I'm sure it's not a it's not a trade-off. So I think, again, working with good providers that are specialists in their field and having good, processes and procedures and, good team internally focused on security is absolutely paramount.
If I can add just one quick comment for Aymeric comment, because I think that that's a key point, is the division of labor. I think that if you go back when we started in 2014, there's no division of labor. I mean, there was nothing, right? And you had to build everything. I think that
yes,
it's more about, I think that the comment is so important is because I think that there are so many players and there's so much labor that now exists in this space that I think it's actually, it's a mistake to try to do everything today. Not because, I mean, everybody wants to win everything and get as much business. I totally get it. But I actually think that people sometimes underestimate what it means to actually do each of these components really well. And therefore, it's a good sign for the industry that you actually have enough labor that people can actually start specializing in certain components. But I also think that it's important for players to have an appreciation. What does it mean to actually have a safe solution for custody, for example? Yes. What does it mean to have an exchange? I mean, even the best exchanges today in the crypto space do not match for the uptimes in the traditional markets. And there's a reason for that. They've been working on these things for the last 30 years. They know what it means to process millions of transactions in a matter of seconds. So I think that I think that that's an extremely important, if the space really wants to mature to the level that I think it could, is people really focusing on what is your expertise, what is the value that you really want to deliver to your customers, and focus on that rather than trying to boil the ocean, which is not needed today.
Okay, and actually, Yuval, you made a very good point about, all these specialized solutions already work, available out there, and you guys are a great example of the sort of question I wanted to go into is about around standardization, right? And there is a lot of standardization coming in this space now. A lot of it is sort of industry driven. So organizations like GDF have come together and they're coming out with their own standardizations. We have many initiatives around standardizing APIs. Some of it is driven by regulation as well. So FATF's travel rule now wants VAS to share information in a standardized way between each other. So do you guys feel this sort of standardization in many cases is actually adding to the convenience in this space, or is it something that is making it difficult for someone like Keyrock, who is always moving funds through so many different providers, and not everyone might be at the same speed at the same time, right? Or might not be subject to the same regulations. So do you think standardization is a way towards convenience, or is it sort of a speed bump on the road, and there are better ways to get there?
I can. To me, it's a chicken and egg. Yes, if you had all the standards established and everybody agreed to them, everybody would move faster. The reality, though, is that getting to a standard is very hard and get everybody to agree on. So it's a chicken and egg, and the reality is that standards are going to be created as we go. Yes. I mean, if you think about historically where standards have been created, it's generally speaking the solution that was the best and was adopted by everyone. I mean, Kubernetes is a solution that was created by Google. Everybody loved it, and then they pushed it, open sourced it, and made it into a standard, right? It's not officially a standard, but it's effectively, becoming a standard. So I think it's a chicken and egg. I think specifically to this space, we should be a bit more mindful, because there isn't going to be a one player wins it all. And the reason why it's extremely important to have standards is that as we start thinking about interoperability, or we're issuing tokens on one platform to another, a lot of chains are very focused on how do we bring developer tools, how do we bring scalability, privacy, all these kind of features. I would say that it's not in their highest priority to create interoperability across chains, right? Like I don't see chains really working super hard to create interoperability. I think, though, when you start thinking about digital assets, if you actually come up with what are the standards of how do you represent a digital asset agnostic to the chain itself, I think that that's a way to at least reduce some of the burden or some of the complexity of having interoperability. So someone like Keyrock or Camilla's company that are creating these different products don't have to now start having, well, how do I develop this financial product for this chain? Is going to look completely different for this chain. It's going to look completely different for this chain. So I think it's going to happen both at the same time. I think that specifically for digital asset, the more we focus on standards of how do you represent a digital asset, the better it will be for the industry. So you don't have these significant differences across chains.
Yeah. I mean, and I think to add to that, like, there have been quite a few initiatives to standardize certain different areas of trading. And I think everyone realizes it's in mutual best interest to have standardized, whether it's settlements or conventions around certain things. Again, to your point, Yuval, this is not a winner takes all situation. We need to create the industry and build it in a way that everyone can grow and, compete, but build something that's going to be scalable and, why have that extra complexity that holds everybody back?
Yeah, specifically about standards, I think there's been generally a lack of standards in this space, and that probably prevented it to grow as much as it could over the past 10 years. I think there's been some good standards that have been implemented. I think we didn't see many smart contracts before ERC20 came along, for example. But at the moment, the standards we have are very primitive. They're just the few standards that we need just for everyone to transact minimally with each other, meaning that transacting, I think, requires to communicate a lot of information to transact effectively, right? And right now, the only standards that we have are the ones that enable us to transact only value, right? So what's your blockchain address? And then I'm gonna send you some Bitcoin, or I'm gonna again send you some Ethereum, and that's basically what we have, right? But moving forward, if we want this space to grow and to also attract more people coming from, outside of crypto, the people that are not weird like us, or some of the people that have been in this space for 10 years, right? We need to communicate a lot more than value when we transact, right? We need to communicate compliance, we need to communicate trust, we need to communicate security, and all these things don't exist yet, right? So those are probably, I think we need to see a lot more standards. The one that we're building just to address the FATF travel rule is just, I think, the beginning. And there is a lot more that's required for this space to flourish and actually take the place it deserves in the economy, I think.
So just off the back of that, Aymeric, are you suggesting that it in some ways is beneficial if the regulators are the ones who actually come up with these and actually push them down, rather than what Yuval is saying is more about the industry really finding the best solution out there and then trying to find consensus or hoping that people are going to look at it and be like, oh, this actually works great. Because with Yuval, what you're saying, if that was the case, then in many cases we don't need so many blockchains, right? And there's still new projects coming out with their own unique features that they feel makes it so much better and so much faster and so much convenient for everyone, when it might not be, or it might be, but then the added benefit is not really worth the pain of going through adding another asset to a custody cars.
So actually, I'm advocating for more standards. I'm not actually advocating for the way they should be defined or implemented.
Okay.
I think what you're referring to is the difference between a bottom-up approach versus top-down.
Exactly.
If we take an analogy, that would be how different countries right now are tackling the coronavirus situation, right? Some are taking a more bottom-up approach, some other a top-down approach. I think we see different results. I don't think there is a perfect approach. Personally, just because we are from this space, we are a bit more bottom-up, but sometimes top-down is required to go fast as well.
Yeah. The thing is about balancing quality and speed, right? If you want to let standards kind of emerge organically, you kind of give yourself the chance to really get the best possible solution. But at the other hand, if you want something to be implemented fast across the board, then you need to go maybe with a more top-down approach. So I guess that, as Aymeric said, I don't think there's one approach that is significantly better than the other. It's just for different steps of of the operations, different part of the space. I think that one approach is going to be superior to the other, even though indeed there is a slight bias towards bottom up, most likely in this specific industry.
Yes. Yes.
I would highly recommend only bottoms up approach for standards.
Okay.
I definitely it's definitely true that a top down approach will accelerate things, not necessarily in the right direction. And if we,
you might go fast, but right in the wall. So that's a risk that
you're going fast off the cliff. Absolutely. So I think that what I want to make sure I'm at the end of the day, I think that specifically, like if you think about standards of how do you do consensus, and I'm less concerned about that. I actually more where I think the industry should do a better job and mindful is more around how do we represent digital assets, and the ERC 20 token is a good example of heading in the right direction. I think that for Camilla's company to be able to create these new asset classes, but in a way that have adoption, if there are areas of what is a digital loan product look like, what are the features that have to be in there? It's not necessarily how do you implement it, but what are the things that a consumer would want to adopt, and that could change over time. I think is extremely important. So you don't have. So then when you have someone like Kevin's company wants to actually provide liquidity on these type of products, it's not, oh, okay, I have this loan product, I have this loan product, it will create a very slow process of how do I adopt these different instruments that are going to be provided by different companies. So my only recommendation is that when it comes to standard is to at least be mindful of not trying to create every type of unique feature, because you always know when you think about a feature, you're like, oh my God, I invented sliced bread, right? It's like, it's like, it's the best feature in the world. And then when you take a step back, you're like, maybe it's not that critical. So I think that it's more standards are needed in how we define digital assets more broadly than just an ERC20 token.
Absolutely. Great. So just being a bit conscious of time, we've just gone over 30 minutes, so I'll try and wrap it up here. And I think this was, from what I hear from the panel here, we're still pretty much a bottoms-up grassroots level movement in digital assets, and people prefer, sort of for different members of this ecosystem, and actually trust each other to bring convenience by each of us sort of excelling in our own spaces at the same time. Making sure we do right by the security and compliance part of it, and then grow this sort of ecosystem very organically. And I think that's a great thing. It still is continuing to be very sort of for the people, by the people sort of movement of digital assets, and that's great to hear. So just to wrap up things, one question on the lighter side to go around the room. Since we are still in this period of coronavirus and most of us are not able to step outside very often, is there a book or a TV show you'd like to recommend to the viewers here today?
I just finished a book called A Gentleman in Moscow. It's Russian count. I think in the 1920s, there was assigned to stay at home, like house arrest, for 30 years. So that had helped me cope with staying at home.
Okay.
Mm-hmm.
Great.
I guess for me, I would say thank God for the Disney Channel. I am not alone at home, so just keeping everyone entertained is good enough for me, I would say.
Great. Kevin, anything from your side, Yuval?
Yeah, I'm wondering if anyone is going to come up with principles or not, because this principles from Ray Dalio tends to be thrown often in those type of questions. I was wondering whether it would come out. I recently had a lot of fun reading Ray Kroc's autobiography. So I haven't had McDonald's in a while when they were closed in Belgium. So I read that book, and it was actually very, very entertaining, as much because of the story being told and the way it was being told by Ray Kroc in that book. So that was a lot of fun to read. Yeah.
Great.
On my side, fortunately in San Diego, you could still go out of the house because it's pretty open. So I've been doing a lot of my triathlon training between meetings. That helped me stay sane. But a book that recently I read that is I think worth thinking about us as humanity, how we got to where we are, is there's an author called Yuval Harari who wrote *Sapiens*, a brief history of humankind, which is worth reading as a intro to his second book, which is about the future, which is about that space that we're in, which is that the future is really is all about data. And I keep on thinking about digital assets really just being a transfer or a more efficient transfer of data, and how the really only digital asset of the future is data and how you manage it. So I think that given Corona, it's a good way to think about us as humanity, how we got to where we are, but also thinking with regards to this space of where we're going from here.
Is a great read. It is long and cumbersome, though. You have to really toil through it. It's too much information to take in for a couple.
That is true, but I think it's written pretty well for a lot of information.
Yes, absolutely.
On top of it, Yuval, you're the one with the library background, so you deserve to have the last word on the book recommendation.
I wish I could take credit for this library. It's not my library. And every book in this library is an architecture book, even more impressive. It's not my library.
Absolutely, and I think my suggestion. I think actually a show I just finished on Netflix, The Last Dance. Quite an incredible show. I think apart from just the incredible journey of Michael Jordan, at least for me, it was just about having the spirit to fight through, or really make something out of nothing. And then I think in hard times like this, it gives you motivation to just keep going. So that's something that I would recommend. Okay, great. Thank you everyone so much for your time today and for sharing your views. It was absolutely amazing for me to hear from you guys and learn so much more about what's going on in your spaces. And yeah, great. I think that's it. Alex, he's still around, I believe.
Yes, I am. And I actually enjoyed a lot the panel, to be honest. I don't know we're going to stop, but I was captivated by the discussion, so it was really good. I hope you enjoyed as much as I did this panel. As you have probably noticed, it was pre-recorded as our panelists were across 4 different time zones, West Coast, East Coast, Europe, and Asia Pacific. I hope you had the opportunity to ask your questions through the chat. Some of the panelists were available during this broadcasting to respond to them. If not, you still have some time to do so. We will try to respond to them, and if not, and we can identify who you are, we will respond by email. The next session will be next week on the 18th of June, and it will be the last one about compliance with these panelists that we will show in a second. Hope you register, like for this session, and that you join us next week. Thank you.